We want to get to our C-suite discussion. A big M&A trade in the airline business, Alaska Airlines and Hawaiian Airlines. Alaska said that it will be buying Hawaiian for $1.9 billion, $18 a share, plus $900 million of Hawaiian's debt. Joining us right now to talk about this transaction, Peter Ingram, the CEO of Hawaiian Airlines, joining us via Zoom from Hawaii. Good for you, my friend. So let's talk about this. Peter, talk to us about this transaction. The market's unsure whether this deal is going to go through. What's the message you're giving to the market today about why this deal should be done?
Well, we feel very good about the deal that was announced. I think it's a good deal for Hawaiian Airlines, Hawaiian Holdings shareholders. It's also positive for Alaska. I think it sets the combined company up very well to compete effectively in a very dynamic airline market. And obviously, we're going to work through the regulatory process over the next 12 to 18 months, but we expect this transaction to close.
I want to pick up on that a little bit because, of course, the Alaska Airlines investors were really spotted that right away, this issue about getting this past the regulators. And this is not an administration that's very friendly to these big mergers. So what's the main point that investors should be thinking about, to put some meat on this idea that the regulatory process will go through okay?
Well, I think the regulators will look at this, as an individual transaction and look at it on its own merits. And what they're going to see is that you've got two airlines that have very complementary networks. We have, big areas of our network where we don't currently compete with Alaska. They also have huge parts of their network where we don't overlap at all. The amount of overlap is very limited, and I think when people look into that and dig into it, that's what they're going to see.
Alaska Airlines, some of their shareholders are skeptical of this transaction, suggesting that Hawaiian will not return to 2019 cash flow levels. We've got Southwest coming into the market. Talk to us about kind of the profitability of your company in today's market.
Well, we feel very good about our standalone business plan. This was a deal that came along and provided us a new alternative, but we were working very aggressively to better our own standalone prospects. Demand remains very strong in our core markets between the U.S. mainland and Hawaii. We've seen good recovery in the Japan part of our business, which is a key piece that had lagged recovery during the pandemic, but really started to come on since May of this past year. We're continue to be the market leader in our neighbor island business, which represents roughly 20% of our revenue pre-pandemic. So as long as we compete effectively, I think there's a good market position for Hawaiian Airlines.
I mean, you mentioned Japan. I'm wondering if you can talk a little bit more about flights coming in from Asia, because with this strong dollar, it might be something that, is putting a bit of pressure on you there.
I think that will hold demand back a little bit. Obviously, when we were pre-pandemic, the yen was trading 105, 110 to the dollar. Now it's in the mid 140s. So that's a considerable amount of inflation that a Japanese visitor looks at when they're coming to Hawaii. But we saw strong recoveries in Australia, from South Korea, and now even Japan has come back over the course of this year, and we think that'll prove to be a steady recovery going into next year. The affinity of the Japanese travelers have for Hawaii is really unparalleled. There were about 1.5 million visitors each year before the pandemic, and it may take a little time to climb back to those levels, but we think demand is going to be very strong over the long term.
Peter, I'm taking a look at your balance sheet, and I see you've got about $1.3 billion of debt maturing in 2026, a big bullet there. What's the plan for that, assuming this transaction does not go through? And how much of your balance sheet kind of brought you to the table to sit down with Alaska Airlines?
Again, we were really confident and remain confident in our standalone plan. We've got considerable fleet assets that are unencumbered. We've got new 787s coming on against which we can borrow, and that $1.2 billion of that maturity in 2026 is represented by a loyalty bond, financing that was raised against our brand and our loyalty program. And so with that coming due, we would have those cash flows to be able to do a financing, and it was under collateralized as it was. So I think the prospects for us continuing to be able to fund the business are very, very strong.
One thing I wanted to ask you a little bit about is your costs, particularly your fuel costs. I mean, regardless of whether or not this deal goes through, this is something that's been plaguing a lot of people in your space. And so can you talk to me a little bit about what your expectations are there and how you're going to manage it?
Well, I don't have a crystal ball on where fuel prices are going, but I do know that if we look back over the last couple of weeks, we've actually seen some relief in the fuel price numbers. And that, as we forecast, we just use a forward curve going forward. So right now, the outlook is a little bit better than it used to be. But, fuel prices are a part of our industry, have been for a very, very long time. For most airlines, it is either the largest cost item or the second largest cost behind salaries and wages. So we will do what we can to conserve. We have a hedging program that helps us smooth out some of the volatility, but we aren't making bets on where the fuel prices go. I don't think that's what our investors want us to be doing.
Peter, as you and Alaska Air execs sit down with the regulators, what are you prepared to do to get this deal approved in terms of maybe routes that may need to be divested, or how flexible can you guys be?
I'm not going to get into any of the specifics on that. And some of that, obviously would be up to the Alaska team to comment on. But the fact of the matter is that these are two networks that are very complementary. There is a very limited amount of overlap. We think the market is incredibly competitive. Lots of airlines serving Hawaii, and we expect it to be very competitive going forward. That's the nature of our business.
Last year, the holiday travel season produced a lot of delays, a lot of difficulties, and then the airline that came under pressure for that was Southwest. How do you feel like the industry is fixed up this year to meet any difficulties in weather patterns? And do you feel like Southwest is still on the back foot here, or is this something you could take advantage of?
Well, I'll just comment on our airline. We're very prepared. We make sure that we schedule within what the capabilities of our fleet and our staffing levels are, and we feel very good about how we're positioned in that regard. Our reliability has been very strong historically, and particularly over the last couple of months as we've recovered from some infrastructure challenges that plagued Honolulu Airport earlier in the year. We've been number one in on-time performance with a very low level of cancellations, and we expect to execute well in the months ahead.
Peter, just 30 seconds. Just remind us, what's the timing of this transaction with Alaska Air?
Well, the next step is for us to file a proxy statement and complete our shareholder vote, which we expect to happen in the first quarter of next year. And then after that is really up to the regulatory process and the Department of Justice to review. We'll be working on filing the information with them and responding to whatever requests. We think given the current regulatory environment in the country, it could take 12 to 18 months to complete the entire process, but we think it could also go quicker than that.
Peter, thank you so much for joining us. We really appreciate getting a few minutes of your time. Peter Ingram, he is the CEO of Hawaiian Airlines, recently announced that Alaska Airlines will be acquiring the folks at Hawaiian Airlines. And probably the highlight for Peter Ingram is he is an MBA from Duke University's Fuqua School of Business. This is Bloomberg.